In this video, traders, we're going to look at why do you not cut your losses on some trades. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. All right, so why is it on some trades we get the urge to hold the trade a little bit longer, a little bit more, and before you know it, it ends up running out of control and ends up being a devastating loss. Now, this shouldn't be happening, and it's something that you definitely need to prioritize working on, because there's the sort of things that are account blowing, and you need to focus on the things that do the most damage first and then work on the other things after that. But why is it only on some trades? You ever asked yourself the question like, well, some trades I don't even have a problem cutting the loss, but some trades I don't. Now, this is my opinion, and you have to let me know your thoughts, guys, in the comment section below. As always interested to hear your views on these things, is that it depends on the setup you're trading. And if you are trading a setup which looks and appears to have a better entry point, the deeper and deeper and deeper it goes against you, then that's when it becomes harder to pull the trigger. So let's look at an example, right? If you have a scenario like this, let's say, this is why trend days just devastate people sometimes on the wrong end of it. You've got this grinding trend, you're like, whoa, it's down, 40 handles on the S&P, 400 points, whatever it may be, your stock's down heavily, and you start buying it here because the thesis is it's down too much, right? That's why you're buying it. Of course, when it starts going lower, you get this thing in your mind that says, well, it's an even better trade now because it's down even more. And then you get the other thing in your mind that's saying, well, you don't want to be the guy that sells at lows, do you? You don't want to get stopped out at lows, do I? I mean, I'm buying it, look, I'm right there. So you end up holding it, maybe even out of the position more and more. And so these compelling reasons to stick with the trade overcome the real reason which should be pushing these completely out of the door in your mind, which is manage the risk. The most important thing, as I go on about at the end of every single video, guys, which you're so bored with now, I imagine, is keeping the risk managed, because without capital, you're out the game. You can have all the strategy in the world, everything, but without that capital, the lifeblood of trading, it's game over. So in that scenario, we're there, it's going down. The thesis is that it's too far. Of course, it's even further now, it's a better trade. And then again, just reminding us that little thing of the ego. I don't want to be the guy who sells at lows. I can't exit this trade right at lows. You need to have that out, done and dusted anyway. You need to accept that if you're an active trader, you will buy the high and you will sell the low. I've done it more than once, and I guarantee I'll do it more times again. It's the way it is. It's always going to happen, but it doesn't matter, because it's the net of the trades that we're taking that matters. If we get caught out on one and it just happens to be too far for us and we get stopped out of the low and it rips off without us, then so be it. That's the way it is. So those type of trades are dangerous. And then you look at another type of trade. Or another type of trade might be, let's say we're buying a kind of pullback here, and let's say it pushes back up and we're long at this point and it starts to go lower. Very often we don't have a problem with cutting that, because it's very obvious. The trade is, well, actually, I'm buying this pullback here for momentum move up, and it's not going to work. And so very often that's not an issue. Similarly, let's say we're buying a breakout to highs. If we buy the breakout and then it reverses, very often we're happy to cut it there. Now, some people are still holding these and getting caught out, and that's another topic completely. But I think the point is that certain setups lend themselves to pressuring you potentially to relax the rules. Maybe another one might be, if you're selling short a pullback, okay, let's say you go short here and it starts to creep higher and higher. Yes, you might well not hold it right the way up to here, but you might say, but my stop should have been here. And then it creeps and it kind of sits there. Maybe it consolidates and then it goes. And those are the kind of things as well where you don't take the loss, because you think, well, I still think it's going to go to lows. I don't want to be selling it. It's too far now. It's too much of a loss. And the trouble is, guys, when you get past the point where you've ignored your loss, you're in a very dangerous position, because that should be just a default binary event. If it hits there, I'm out of the position. Now, if you ignore that, the trouble you've got is just you're in a real trouble spot, because not only are you damaging your confidence because you can't believe that you can stick to this simple rule of executing when you get out of a trade, which is super damaging. You don't realize it, but it's like hidden damage that constantly is going to be wearing away at you. But the trouble is, once you do that and it goes get away from you, you always become like, well, this is a loss. I don't want to take this loss. This is more than I want to take. So you become unwilling to take the loss and hopeful that it'll come back because you don't want to crystallize that large loss. And you're still thinking, well, the trade could still come back. It could still come back. And you've got a thing of, well, you know, it's right on the edge. I've got a really good position here. I need to hold it. It's a really good entry. Look, you know, I could have been shorting it down here, but actually I'm shorting it up here, and it's okay and it'll work out. And you've got all these things justifying it. And then you're in a real trouble spot. The rule is, guys, if you've got a hard stop, then you stick to it and you exit the trade. And just as this kind of extra thing on this video is that be careful for some of your setups, which are the ones that maybe make you more vulnerable to not cutting your losses. For example, maybe a trade like this where you're trading a stretch move for mean reversion. You know, maybe a trade, whatever the trade may be for you. So highlight those, be aware of those, and say, listen, these could be, I need to be extra strict with cutting my losses on these, because these are the ones that can be devastating. And also, just finally, guys, the point is these trend days as well, and not saying you should be buying just random on the bottom here, but these are the trend days as well, because they're outlier type days are the ones that, you know, I've seen days where, and you probably have too, where you've got this price action here, and that looks heavy. It's like, wow, you know, it's down like 200 points in a heartbeat, and then all of a sudden, you know, it looks like it's just a little tiny blip on the bigger 2-day pitch. You think, you know, if I'd have held that over 2 days, I'd have been absolutely hammered. So you've got to be careful, because these are outlier days and can cause even devastating loss. So watch out for the types of trade setup that look better the further they go against you. Watch out for your thesis for the trade, and be very strict with cutting the losses. And at least then, you know, you don't get one devastating trade that wipes out your account. Take care. See you next one. Bye bye.